Hello, my name is Cheryl Richardson, a student of Aspen University. This short video will provide a brief overview and selected options of capital financing for healthcare organizations. Capital financing is ways organizations use to raise money for business operations and short and long-term financing. There are two types of capital financing: equity financing and debt financing. Equity financing is a primary source for not-for-profit healthcare organizations. For-profit healthcare organizations also utilize equity financing, but not as a primary source. Equity financing involves selling shares of the business for a cash investment. There are two ways of equity financing: private placement of stock with investors and public stock offerings. Private placement of stock is a sale of securities to a pre-selected number of individuals and institutions. These sales have very few regulated terms in comparison to sales of securities on the open market, and allows the company to get the money they need to grow while delaying an initial public offering. A public offering sells equity shares as bonds to the public to increase capital for operational expenses, fund business expansions, or strategic future investments. It may offer equity stakes with common and preferred shares of other assets that are traded like bonds. The Securities and Exchange Commission approves all registrations for public offerings facilitated by an investment underwriter. Equity financing can occur several times before reaching maturity. The use of funds is flexible, and there is no legal obligation for the business to be successful, although this is the goal. Investors must be kept informed of how their money is doing. One disadvantage is different personalities and opinions that can cause an issue. Most investors inherit voting rights, which can sometimes cause an issue with decisions and ideals. Investors should be selected based on the fit with the organization's vision and goals. Debt financing is borrowing money from other resources at a cost without giving up equity. There are two types of long-term debt financing that organizations use: banks, loans, and bonds. Bank loans is financing of debt with a maturity of 1 to 10 years, and bonds are a form of long-term financing of debt with a maturity of 20 to 35 years. Bonds are provided as a promissory note to the investor once the issuer receives the cash. The bond is a form of agreement to make payments of the principal and interest on specific dates. Small business administration loans, business lines of credit, business credit cards, and short-term loans are other types of debt financing. There are advantages and disadvantages of debt financing. Benefits of debt financing include quick turnaround, flexible use of funds, availability to any business for financing, set repayment loan terms, tax-deductible interest payments, business retains ownership, builds business credit, retains control of business management and shares of future profits, and no requirement for investment or shareholder communication. Disadvantages of debt financing include term debt payments decrease business revenue. Principal and interest are required for repayment. Breach of agreement with repayment could lead to asset or business liquidation. Borrowers must meet credit score requirements for financing, and too much debt interferes with future financing. Before a healthcare organization considers capital finance options, there are key questions that should be discussed when selecting methods of capital finance. How fast does the company need the finances? How much money does the company need? Is the need for capital long or short term? What are the growth plans for the company? Answers to these questions can guide the selection of investments with terms of repayment, building business equity, and increasing wealth that is affordable and appropriate for the healthcare organization's sustainability and success. Research provides advantages and disadvantages with both types of capital financing, depending on the needs of the healthcare organization. Strategic planning for use of mixed capital finance of equity and debt financing would be my recommendation. This will allow cash flexibility with short-term growth for immediate needs for operational revenue and long-term growth for expansion projects, sustainability, and future investments. An investment to sell shares of the business to investors secures their interest to help build the business faster with an increase in competitiveness with the market. Investors can share their knowledge and experience as the business grows and are more willing to provide additional funds. The shares will be limited so the healthcare organization retains control with the final decision making. Investors provide the opportunity for the healthcare organization to focus on growth plans for long-term investments. A second option is to secure a bond. Securing a bond for a long-term investment provides a large amount of capital that can be used for expansion projects, renovations, technology, and additional investments. As a long-term investment, bonds provide a large amount of capital to continue the growth of the organization through renovations, technology, expansion, real estate, and other investments. The maturity period provides the opportunity to manage funds through a revolving line of credit with set payment of loan terms. Bonds provide the best flexibility with immediate and future use. Using a mixed capital finance business plan, provide a short-term finances with engagement of investors, and long-term finances to prepare the healthcare organization with success for the future. For this video, I use various resources to research capital financing and the contents for discussion. Research supports all types of capital financing, depending on the needs of the healthcare organization. Each healthcare organization is different and must carefully incorporate their short and long-term goals into strategic financial planning in order to determine the most appropriate capital financing is for their particular needs. This concludes my video presentation on capital financing.